And now we're going to delve further into the energy landscape in the midst of the U.S.-Iran conflict with our panel. Please welcome David Blackmon and Rey Trevino. David is an energy policy analyst and advisor, plus a senior contributor at Forbes. Rey is a VP of operations at Pecos Country Operating in Fort Worth, Texas. It's great to have you both here. David, as we mentioned, Qatar Energy has stopped liquefied natural gas production following military attacks on its facilities. Give us a big picture of what Americans can expect in terms of gas prices with what's happening in the Middle East.
Well, first, thank you for having me. It's always a pleasure to see my friend Rey. So American consumers are going to be hit with some higher gasoline prices probably in the next 24 to 48 hours. It won't be a massive increase. We've had, as you noted, the price spiked by about 9% for crude oil at the opening of trading. It's kind of tailed off since then. We're up about 7% altogether, which is not a huge price increase yet. And I think that's related to the fact that this is mostly an insurance problem right now. The Strait of Hormuz is not blockaded. There aren't any underwater mines stopping traffic from going through the strait. The issue is that insurers have notified shipping companies that they're going to have to pay a bigger war risk premium, in order to have their cargoes insured for going through the strait. So while that's being worked out, there is virtually no shipping going through the strait right now. I think what we're seeing right now is that traders are kind of holding back to see how long it's going to take to get the insurance issue worked out, and whether or not shipping traffic then does resume once that happens. If this lingers for another 4 or 5 days, then we could see a more significant price increase, I believe. On LNG, of course, you mentioned Qatar shutting down its LNG shipments. That's going to put more demand pressure on U.S. LNG, which is we're the biggest exporter in the world of LNG, and Qatar is the second biggest. And that could also result in some higher consumer energy prices here in the United States. So mainly, this is a price issue right now, and hopefully it will be a short-term one.
David, I follow, and thank you for sharing that. Rey, it seems like you're listening intently. Do you have any more thoughts to share on what your co-panelist was saying?
Yes, absolutely. It is always good to be on, especially with David Blackmon, one of the industry's leading experts. Definitely right now we're watching the Strait of Hormuz with intent, especially being an oil producer ourselves here in the great state of Texas. Like David said, right now insurance is what's unofficially holding up the Strait of Hormuz. I will not use the word closed at this time. If Iran was to actually close the Strait of Hormuz themselves, not only would that not be well for the global supply of oil and gas, but it would actually shoot Iran in the foot, and they would stop their own oil production. Keep in mind, this is going to be all about seeing if President Trump can do the same thing that he did in Venezuela, which is work with whoever he can, but also control their economics. And oil is their number one economic cash flow. So it will be real interesting. I do as well hope this is a short war or a conflict, as I should say. But in the end, I wouldn't be surprised to see if the United States is controlling that 3 million barrels of oil a day, just like we're controlling the 3 million barrels that's coming out of Venezuela. And one more note, that by us messing and basically going into Venezuela and Iran, we have now taken out 2 of China's major oil importers. That is who they get their oil from at a cheap rate. And the same with Russia, that Russia gets a lot of cheap oil from Iran as well. So we could hopefully see some good bargaining and negotiations in ending the Ukraine war as well here in the next recent couple of weeks.
Rey, very interesting. We know that Iran produces oil, and a lot of it has to go to China because of sanctions. They don't have anywhere else to sell it. Now, David, let's expand on this. As we mentioned, more than 20 million barrels of crude and other fuels transit the Strait of Hormuz per day, and that was in 2024. And now our shipping companies are suspending their operations due to the tensions with Iran. So what short and long-term impact will this have in the oil industry?
Well, I think the first point to make for the consumers watching this, there's no risk in the United States of a shortage of supply. Okay, we're not going to have long gas lines. There's no reason for panic. We import very little crude oil from the Middle East into the United States. In the short run, we're going to have some higher prices. In the long run, we could actually have lower prices depending on what kind of government replaces the regime in Iran, if there is a regime change. If you have a more friendly government that's interested in becoming a real citizen of the world community, then Iran has potential to dramatically increase its production and exports of crude oil, which would put more oil on the market, would put downward pressure on crude oil prices, which in turn would cause lower gasoline and diesel prices. So in the long run, if there is a government installed there that really wants to be a productive member of the community of nations, this could have a very positive effect on both consumers and on the oil industry in general. In the United States, we're by far the world's biggest producer of both crude oil and natural gas. If you had more crude coming in from Iran, you could see less pressure on the U.S. industry to continue to increase production like it's been doing over the past decade, and that would allow us to preserve reserves for the future. So this is potentially a very positive outcome if things go well, which of course we know in wartime is always kind of a crapshoot. So we'll see how it all goes here in the next few weeks.
I hear you, David. And Ray, being connected with the U.S. domestic production, do you have anything to add to that?
Yes, we are going to continue to drill, baby, drill here in America. A lot of independents like Pecos, we have drilling programs. Things like this have not deterred us for this year. We just got back from a great industry event, and the industry is excited. We have a price of oil. Obviously, we're higher than we were last week, but we about know where the price of oil is going to be for the next 12 to 18 months, barring any long-term conflict in the Middle East. And we want to continue to produce that oil here in America. As David said, we are the #1 producer of oil in the world at almost 14 million barrels of oil a day. And the great state of Texas produces almost half of that at over 40%. So thank God for all the great men and women that continue to be in this industry. Because of that production, we're not seeing these giant spikes in oil prices like we have seen in years past. And on another note, it is real interesting to find out that over the last 2 weeks, OPEC in Saudi Arabia primarily has actually been producing a lot more oil than normal. And that has been able to get out at least of the Straits of Hormuz. So we have a larger supply actually already en route across the world, as if they already knew something like this was going to happen and they were being prepared. And again, with Texas and America prepared to continue to produce, we are ready to drill, baby, drill, and also build, baby, build, as we continue to update our infrastructure here in America so that we don't have to rely on foreign oil as we have in the past.
Very, very important insight that you bring. And of course, President Trump has sought to make the United States a net energy exporter. Now, David, back to China. Data obtained by Politico shows that Venezuela and Iran made up nearly 20% of China's overall oil purchases. So what does this all mean for communist China?
Well, it's going to be an economic hit mainly. You're right. They have been able to import almost 3 million barrels a day combined from Venezuela and Iran in recent years at highly discounted prices, as much as 30% below market price. Those days are going to end now. They're going to have to pay market prices for their crude oil. That's going to diminish their competitive advantage on the global stage. It's going to reduce their geopolitical influence around the world. And it's something that the Chinese government is going to have to really find a way to contend with here in the coming months and years. They've been able to dominate a lot of supply chains, in part because of this competitive advantage on energy prices that is now going away. And that should make it easier for the United States to free some of those supply chains away from Chinese influence so that we are not dependent on China for our own energy needs of any kind, including not just oil and gas, but energy, minerals, and solar panels and all the products that go into wind power as well. So this is a hit. There's no question on China's economy, and it could also impact them just in terms of having to scramble for ways to satisfy their own oil import needs here in the next few weeks.
David, thank you for that geopolitical note. And Ray, does that spark any of your thought processes?
Yes. What this really does, ladies and gentlemen, is bring the United States back to the forefront to let the rest of the world know that we are the number one country in the world as far as we're concerned. But what this is also is a game of chess. We arrested the president in Venezuela. We took over what they were doing illegally in selling oil on the black market. And now we're doing the same thing with Iran and removing their oil from the black market. And ladies and gentlemen, what this is truly doing is making it a more fair playing field for abundant, reliable, and actually, like David said, more affordable energy in the long run. So this is just an exciting thing. Our thoughts, our prayers are with all the military around the world and those military families that all get home safe and sound, and that this can be a very quick conflict.
Ray, I hear you. And David, going back to a previous conversation, is now a time for the U.S. and its allies to reassess where it sources energy and oil, given that the market's so sensitive to Iranian influence?
Well, I think, every country has to make their own decisions in that regard. I was proud when the United States cut off imports of Russian oil when Russia invaded Ukraine back in 2022. I've been, supportive of the efforts of the United States government to sanction both Iran, Venezuela, and Russia in terms of their oil exports to try to influence their behavior on the international stage. European countries, they've also had to make their own decisions. They allowed themselves to become overly dependent on Russian natural gas, and now their consumers have been paying a pretty staggering price for that mistake in judgment. And, it's all kind of redounding to the benefit of the United States industry and the United States economy here, because with Qatar shutting down their LNG exports, we're going to need more exports from the United States LNG industry. And of course, we're going to need more exports of United States crude oil as well here in the coming weeks to kind of fill the void that's now happening in Iran, because Kharg Island's power got knocked out last night, and that's their largest exporting facility. And so they're not even going to be able to load cargoes here for the coming weeks. So this is all a time for every country, I think, to kind of step back and assess where and how it's obtaining its oil and gas needs, and to kind of make better judgments on whether or not you want to participate in these black markets involving the dark fleet of oil tankers and all this sanctioned crude oil going into the future. I think it always ends up being a losing proposition at the end of the day.
So many important points you make, David. And Ray, how about you? We see the Aramco plant shutting down because the ripple effects spinning off of the U.S.-Iran conflict. What should the United States be looking at in terms of the future of this oil industry?
I think really what we need to be looking at here in the United States is continuing to update our refineries, continue to make sure that we can become truly energy independent. It is a proud day that we can be producing that 14 million barrels of oil a day, and we need to also find that sweet spot. Right now, we think it's between $75 and $85 oil, to where oil and gas companies and the shareholders, investors like at Pecos, were able to continue to send out revenue checks and dividends to our investors. And also, more importantly, that the economy of the United States continues to thrive and grow. And right now, with these less expensive energy rates across the United States, we're really able to do that right now. On another note, the more liquid natural gas and more infrastructure that we can build here, including refineries, we're actually going to then be able to lower our electricity rates. That is something that we continue to watch here in the United States. So really, the more energy we can get online and update our transmission lines and pipelines, we'll be able to not only become more self-sufficient, but then bring down the price of energy across the United States and then globally.
Thank you for that, Ray. Now, David, President Trump says the strikes on Iran could last 4 to 5 weeks. Does that signal there could be longer-term disruptions to oil supply, and how could that impact Americans and businesses?
It's hard to know, right? It's hard to predict these things in a time when you're engaged in this kind of kinetic conflict. As we all know, every country always has a plan going into a conflict like this, and that plan falls apart pretty much immediately, and you have to improvise. And so it's all going to depend on how this all goes. For the past 2 days, this appears to have been going pretty well. In fact, incredibly well for the U.S. and Israel. And now some of the Arab states in the Middle East are also talking about coming in and joining in an allied effort to disarm Iran and stop it from these indiscriminate bombing runs on civilian in cities and residential areas all over the Middle East. So as long as it continues to go well for the United States, I think we're going to see here just within the next 72 to 96 hours a resumption in traffic through the Strait of Hormuz. And it does look like we're going to be able to provide significant cover for those ships. And I really don't expect this to become any kind of a major blowout in oil prices that really has a major negative impact on the global economy.
Understood, David. Now, Ray, final thoughts on this?
Yes, as this conflict continues, I'm thinking of President Trump as a businessman, and as he says that he continues to escalate this over the next 4 to 5 weeks, I'm sure what he is looking for is a motivation for Iran to get back to the negotiation tables to where they have absolutely nothing left, and will be able to work with either the existing regime or a new regime or a new government system to actually provide Iran the opportunity to be a true citizen of the global community and be able to work with the rest of the world and not be so much anti-world and also so much anti-America. So it does bring much hope I do keep my fingers crossed and hope that this conflict will not last 4 to 5 weeks, that Iran will come back to the negotiation tables. And also one other thing, we have 2 fleets there in that area right now in the Middle East. They're there to protect the Strait of Hormuz just as much as they are there to provide air cover and motivation to bring Iran back to the negotiation tables. So we would like to think that we won't see skyrocketing oil prices, barring something that I just don't see coming in the near future.
So many great points from both of you and a lot of hopeful notes. David Blackmon and Rey Trevino, thank you.
Thank you.
Thank you.